Welcome, and thank you all for joining us for this episode of the Crexi Podcast, an insider's look at all things commercial real estate. This show covers a broad range of topics that cater to Siri newcomers as well as industry leaders alike. I'm your host, Matt Kors, here with Crexi. If you're not familiar with us, Crexi is a comprehensive digital commercial real estate platform designed to empower CRE real estate professionals with the tools they need to discover and transact property. Today, we're thrilled to discuss the retail renaissance with Jimmy Slusher. And Jimmy, let me do a quick background on you here before we get into it. Jimmy works with CBRE's National Retail Partners West team to market, execute, and close disposition assignments. His brokerage experience and retail background benefit the team in successfully implementing different assignments on behalf of NRPU clients. Jimmy advises his clients on the acquisition, disposition, and 1031 deferred exchanges of retail investment properties. He strongly believes in the importance of providing his clients with the best team on the field advisory platform. I like that. And a superior marketing process, a team approach to ensuring superior results in today's investment market. Jimmy sold over 213 properties with NRP West, totaling $3.4 billion in value. That's a big number. This is really impressive to me too. In 2018, Slusher and the NRP West team closed 67 transactions valued approximately $1 billion, which is a lot in 1 year. And to take it far back, you did real estate development and finance at the University of Southern California. Jimmy, welcome to the show.
Right on. Thanks for having me, Matt.
Absolutely, man. It's been too long. It's been too long. I need to make it down to Orange County more.
There you go. It's, as you can see, it's beautiful.
It looks a little more open than it is up here in LA right now.
There you go. Exactly.
Surprisingly, Venice Beach is clear now. I don't know if you knew about that, but there's nobody living on there anymore, which is it is interesting.
That'll probably be good for boardwalk retailers in the sense that tourists might be a little more inclined to go visit at this point. I was in Santa Monica just yesterday for a closing dinner, and it looked like it had bounced back quite a bit, which was a good sight. I had previously been up there in December and January, and things were still pretty shuttered. So good to see that's starting to bounce back a little.
Yeah, I think Santa Monica has been decent compared to Venice, I think, but I ride my bicycle to work a few days a week, and it's just interesting to see. There's a couple new restaurants that have opened there, and families walking around and probably feeling a little more safe. So yeah, it's pretty interesting.
Yeah, well, good for you. That sounds like a nice way to commute. I'm jealous.
Yeah, LA is kind of nice for some of that stuff. That's for sure. That's for
right
sure.
On, man.
If you're close, I don't leave my little bubble of a 4-mile radius. So if you're cool with that,
most don't. So that's totally expected.
Absolutely, man. Absolutely. Well, yeah. I mean, from you guys, and I know we'll get into this a little bit, but it's been pretty wide open around Orange County from a retail standpoint, I would think, right? That's what we hear, at least up here in LA.
Yeah, so I would say Orange County's done a good job of showing kind of the benefit of the suburban model to retail. Yeah. With most of our retail being open air, you have the ability to access it from your own private vehicle. You can approach the retailer, through the parking lot. You're not in a parking structure. You're not dealing with a face-to-face interaction with a parking attendant. So for the most part, Orange County's fared well. There's still challenges. Dry cleaners are still obviously not seeing the volume they were before, as folks are just simply not going, they're not fully back to the office and needing the full button up.
Oh yeah.
But for the most part, most have learned how to adapt. Restaurants, even as things are starting to flare up, as at the time we're recording this, the Delta variant is definitely a factor. But I think most have learned how to live with it. I think if you were not going to survive the pandemic, you've already met your doom, and you're just no longer in business, unfortunately. And I think that's probably, one of the things we'll look back and in hopefully, not too long, and see, unfortunately, that some people lost, their livelihoods and some quality businesses they had built over time, by no factor of their own. Just, whatever that particular line of business was, just didn't have what it takes to, to survive the longest 14 days of all of our lives.
Tell me about it, man. It's an interesting point you bring up too. I didn't think about it, but yeah, if you've made it through until today, I would think you're going to be good through the next course, since it's like you said, the longest 14 days of of our lives up to this point. That's for sure.
Yeah, it's been an interesting run in retail, and obviously we'll get into this more. But we're we feel for everyone that's struggled throughout this. We were right there with them. All of our deals were canceled to start the pandemic, and we were able to revive a good amount of them. And I think most would agree. A lot of folks have had to work twice as hard for half as much, but that's kind of just that's the way the world goes sometimes, and you keep grinding. And I think a lot of folks in our industry have really, really impressed themselves and their peers with how they've creatively found ways to work through the different challenges that have come about as this, this pandemic has evolved, and the different regulations you've had to deal with different municipalities, different states. We have the benefit of seeing shopping centers in Northern California, Southern California, Arizona, Nevada, and parts of the Northwest. So we've gotten a kind of an interesting perspective on the way not only patrons are frequenting shopping centers, but also the way business owners, both national and mom and pop, have been resilient and creative in adapting to the pandemic, and some in really creative ways that have helped improve their brands. So it's been interesting.
Yeah, and you guys have seen it from, pretty up close, just working with these people across the board on the West Coast. That's really cool how you've seen them adapt and rebrand and do that for a long time now. So I bet that's pretty cool to work directly with them and help them out and so on and so forth.
I don't know if we've helped anyone out. We've definitely tried to figure out how they're making it work,
Right.
because the only way you can get a shopping center sold today is you've got to determine a net operating income. And if half your tenants aren't paying, you need to figure out why, and if they're ever going to pay, and work with your landlords, or in this case our clients, on creative solutions that are acceptable to investors. So again, we'll get more into that later, but yeah. I appreciate you guys having me here. We've been big fans within the NRP West of the Crexi platform, having used you guys since nearly the very beginning. But we've really appreciated the partnership and the exposure you've given a lot of the assets we market over the years. And our team's one of our kind of staples is we've definitely always tried to be as cooperative as possible. And Crexi's done a great job of introducing our properties to a lot of investors and brokers that we didn't know before, and that's helped us get a lot of deals done. So thanks for having me.
Well, thank you first for being on the show, and second for those kind words. You guys have definitely been one of the first teams that's been using Crexi, so we greatly appreciate the support throughout the years. And yeah, it's been, you guys. I feel like you guys are trailblazers, and you saw us up and coming, and saw you saw some good stuff on the horizon, and so we're excited to have been working with you guys for so long. That's for sure.
Right
But
on.
what Yeah, why don't we take it back? Like, let's chat about, how did you get into the retail space, and, kind of your CRE journey into the industry, more or less in your own words. Why don't you take us back before the CBRE days and whatnot?
Yeah, it's funny how you end up in a position. I think for most, I grew up the son of a chiropractor who had actually eventually started buying the buildings he was occupying, and so we'd spend the weekends maintaining them, which I loathed, because your parents would pluck you from hanging out with your friends to go power wash parking lots and fix fix different little small capex items in the properties. And but then as I got older and realized you needed to find a way to make money to survive and do the things you like to do, it just kind of felt natural, and I was drawn to it. So in studying real estate and finance in college, it was very exciting to see how you would properly underwrite and finance the type of properties that my parents had come to own over time. And I didn't choose to go into retail. It was more like after I graduated in May of 2008, and the world was collapsing. When I was given an opportunity to become a broker, I asked what product type I was going to work on, and they said retail. And I said, it's the only one I don't know anything about. They said, great, you're going to work on retail. I said, great, I'll work on retail. And so, spent the first 6 to 9 months driving the streets, photographing every shopping center I could, starting to reach out to those ownership groups, building relationships, understanding how they were working through that particular, moment in time, as we now all refer to as the GFC. And I would say it was probably one of the best things that happened to me, not only as a broker, but just as a real estate person, because you really saw the world through the eyes of just like sound fundamentals, as opposed to just running and gunning and everything's going up, and like, I guess the underwriting's okay, we'll make up for it with the pro forma. Like, this was brass tacks. Like, you didn't miss a dollar when you were underwriting multi-tenant retail in 2009 and 10. And even if you did apply as much realistic underwriting as you wanted, no one would believe you, because everyone's tenants were crying for lower rents and assistance. It was a different story. It was more of a slow bleed out for a lot of tenants that weren't going to survive in those days, versus what we saw in the spring of 2020, where it was just so rapid and fast. It was almost like you didn't have time to complain. You either were in the game or you were out. And so it was a great lesson. I would not change the timing of my entrance into our industry in any way. And I would encourage anyone who's just getting started right now to embrace the fact that it's different. It's not how the company you're working for did it previously. Your ideas as a young person, while they might not seem relevant, might just be, like the cool alternative way of approaching a new problem that none of us have contemplated in the past. So there's great opportunity right now, as I think most would agree.
Yeah, that's a great story. First and foremost, that you really learned the value of sweat equity before people were kind of talking about what that is, I guess, from way back when.
Yeah, and I think a lot of brokers start out that way. There's no just off the shelf starter pack for brokerage. There's so many different components of our business, from leasing to investment sales, going at it from the analyst perspective, underwriting a lot of assets, or from a property management perspective. There's a lot of great ways to learn our business. And that just happened to be my path. And at the time, there weren't a lot of jobs with paychecks. So wherever you could get a desk and a phone, I think I had to buy my own computer. So the few dollars I was gifted for graduating college went into acquiring a new computer to start my little real estate business. So it was a neat time, and it worked out okay.
This is probably pretty prime advice for people today getting into the industry too, if I had to guess.
It always feels tough no matter what time you start, I think, as a broker. And I think it is tough no matter what time you start. It's just kind of different headwinds. But it worked out okay.
I'm glad to see throughout the years, man. That's been great for you guys. Do you any reason why sales versus leasing, or was it again just this was a thing at the time? And I'm sure people weren't jumping to lease retail space back then, so maybe that was part of it too.
It just so happened to be the contacts I had in the industry, and kind of the internships and work I had done before I graduated were kind of more on the capital markets side.
Nice.
And then, I knew I always wanted to get into brokerage. I didn't think I would do it right away out of college. I wanted to get into more of a mode or a a job where I could learn a lot more about the industry, but you just didn't really have that opportunity. Um, and so it was just capital markets from the start. And I'm glad I went with that route, but it would have been nice to maybe spend a little time on the retail leasing side. But I think it plays such an incredible component of creating the value and the valuation to a shopping center. You kind of learn it simultaneously regardless.
Absolutely. No, that's great, man. That's really good. And we kind of went over this a little bit, but any advice to either someone already in the industry, first and foremost, or thinking about getting in right now, graduating college or whatnot? Would tell them to get into retail, tell them to get into commercial real estate, try something else first.
I would lean on your strengths. If you've got a background in industrial or data centers, whatever it might be, where you can provide a unique perspective or advantage to your clients, that's always going to set you up for the best level of service, and that ultimately will lead to additional success getting into at least the brokerage component. But I would say go with your strengths, or if you think there's something that really interests you, just dive all in and become the unequivocal expert on it if you can. Because I think this business continues to become more and more specialized. So whereas our previous generations kind of ran as jacks of all trades, they'd lease the deal, sell the deal, finance the deal. It just, there's too much going on and the world's moving too fast to wear too many hats. So just really would encourage folks to specialize if they can.
Yeah, that's definitely good feedback. I think we're seeing that a lot more on our end too. A lot more specializations, especially in bigger metros, I think, versus maybe third part or tertiary and whatnot markets, secondary.
Yeah, for
Um,
sure.
yeah, man. What brought you to CB? And this is might be a loaded question because I was going to ask it twofold. Have you always been on a team environment or ever been solo by yourself? And kind of goes back to, would you recommend that to a younger person? Go off on your own or attach yourself to a good team?
Yeah, it's a good question. I'm a big fan of the team model. I grew up playing team sports.
Hmm.
I like the idea of when you win, you've got folks who share the victory with. And there's going to be the losses, and so you've got someone to kind of lean on when you've put a lot of effort into something and it doesn't go your way. But I didn't always, I wasn't always on the team here. I started out kind of on my own, and then I was introduced to my team by a great client and friend of both my teammates and myself. They were looking to add someone with a certain level of experience, and it just happened to be a really great fit from both a style, and a retail background, and then also just like personality wise. I work with, we've got a good sized team here, and they're all just like some of the coolest people you'll ever get to meet, and they're a great time to hang out with. They're really smart and reliable when it comes to the business side too. So I found a good spot here almost 9 years ago, and it's been a good partnership ever since.
That's awesome, man. That's really cool to hear that. Do you think like in the team environment you guys have any like tools that you say are really valuable? And again, I think this goes back to advice you'd give to other people, but just coming up on it and then trying working your way up to a leadership role or something along those lines. Anything you'd provide from feedback from that angle?
Yeah, I think whether you're working as an individual in our business or on a team, clearly identifying the goal and then the process you're going to follow to get there, and really honing that process and sticking to it, and repeating it, will allow you to better understand if the results don't hit or you don't get to the goal. You need to look back at the process and figure out where the variables came in that maybe pushed you off course. And if you stick to the same process and, in our case, you're marketing a property and you're not getting the results you're looking for, then it makes it very easy to look back and go, okay, well, then we need to adjust something, right? Because this same process has worked for, call it hundreds of properties before this. So where do we need to change things up here to get back on track to the result we're looking for? And so whether you're doing that as an individual or you're doing it as a team, I think that's what makes our team function so well, is we, for the most part, stick to a pretty consistent process, and everyone, buys into that process. And so as we're working through our day, everyone kind of understands what their position and role is. And we all know we're rowing in the same direction, though. It's just in different seats, but all in the same boat, headed in the same direction. And I think that's really made working on a larger team, a little bit easier to handle.
I love that analogy, and it's great. It's great advice. I'm working with a new team here myself, putting a lot of things together, and just like you said, like look at the process, course correct along the way if you have to, and stick to the script as much as you can.
Absolutely. There's a great book called Boys in the Boat. I'm sure most have heard of it, but
Absolutely.
it's a good one, and it's not a business book, but it has a great message. And at the end of the day, you just got to really trust the folks in the boat with you, because if you're worried about them or thinking about them like competition, you're not going to be at your best, and you're going to hold them back. You really got to just trust the rest of the team.
I couldn't agree with you more. Great book.
Yeah,
Definitely.
fun one to
Definitely
read.
recommend. Yeah, it is. Definitely recommend that one. Awesome, man. Well, let's get it back into the retail side of things. So, diving into today's topic, the retail sector has undergone interesting times right now, and I think from your angle, it's interesting to hear about it because this is now the second time that you've seen some pretty big changes in the industry. Are you seeing like fundamental side of things? Anything that existed before that remains true today, or maybe that you're seeing that it's come back from your '08, '09 days it's now back to today and what you guys are doing?
I think the most consistent theme I've seen between, the GFC and today is that great assets bounce back faster.
Mm,
Like we were just talking about, Santa Monica is,
yeah.
while it was like literally shut down and a ghost town in December of 2020 and January of this year, being back up there, folks are cruising the promenade, right? The street, second and fourth are open. The restaurants are back open. Now some are, open at different capacities or working within their own, corporate guidance, but for the most part, they've opened back up. And if you look at placer data and mass data tracking, actual foot traffic, they're above 90% of pre-pandemic traffic levels.
Wow. I didn't
And
realize
that's,
that.
for the greater LA kind of county region with regards to retail. And so for that fact alone, you can see if you've got good, well-located retail in areas people want to be in, you're probably going to fare okay through these inevitable setbacks. And I think you saw the same thing in 2009, 10, and 11. Folks still want to get out. They want to recreate. They want to meet in a third place that's not their home or office. And I think the pandemic actually reminded us of that more than ever, because we, for the first time, weren't allowed to do it. And so, the concert circuits are back up in full. I, I won't get into the vaccinated or not discussion, but I definitely am, and I'm enjoying the freedom that comes with knowing I'm good to go on that front. With small kids at home, that was just, my personal choice. But it seems like everyone's very excited and eager to be back at a retail shopping center. And even if you're only going to the grocery store for just your essential food, and you're still taking it pretty conservatively in reemerging into this, new world, you can't deny the fact that there's just an absolute ton of cars parked in every shopping center any of us go to. People are still happy to sit on patios. They're actually enjoying the patios more. Cities are cooperating more with the patios. They're cooperating with to-go food and to-go alcohol. And everyone's kind of like let their guard down a little bit. And what we thought we were doing before, which was like protecting ourselves and being a little bit less guarded, we've actually, opened ourselves back up to being a little more human, and collectively, I think we're enjoying it more. So retail's experiencing a little bit of a tailwind in that sense, and that people are so excited to be back out, and meeting up and seeing each other face to face, however they feel safe enough to do that.
Absolutely, man. I couldn't agree with you more there. I haven't been to a place yet where it requires you to show proof of the vax, but I know they're out there. So um, when that happens, yeah, I'll be excited to see that. But walking around Santa Monica, like you said, it's great to see everybody out, being able to, whether you're sitting outside or inside. I mean, everything it feels comfortable, right? It feels normal again.
Yeah, and people are just excited to see you, I think.
Hmm.
Whereas before we were all maybe a more private, or sticking to the group we were walking with on the boardwalk. People are looking each other in the eye and smiling. They're being a little more cordial when they're scooting around each other in the aisle at the grocery store, right? Like I think there's a new appreciation for interaction with specifically strangers, right? Because
Yeah.
you know I mean, no one really goes out looking for strangers, but when you don't have the opportunity to do it, right? You maybe are like, I kind of like running into random
Hmm.
people at Target, or in line waiting for my Starbucks or whatever it might be.
No, I agree, man. It's great. It's great to see other humans out there. That's for
Totally.
sure. That's good.
Although I will say, like obviously not everything's recovered
Hmm.
perfectly. I think enclosed malls are still kind of challenged. That's not a secret to anyone here. It's well documented with a lot of headlines out there. But again, the best fortress malls around the country are back to pre-pandemic traffic levels, if not real close. And so, you look at Fashion Island, South Coast Plaza, Shops at Mission Viejo, like the real A malls around Orange County. Again, those are places people are meeting up. They've got plenty of ventilation, and the retailers are, the right retailers are back on track. The restaurants are reporting sales in a lot of those locations at better than pre-pandemic levels. Check sizes are up. People are again enjoying more time when they do get the opportunity to sit down. They're ordering the bottle of wine, they're ordering the appetizer, they're getting dessert. So it's good to see those restaurants hopefully recapturing some of the lost sales, during the peak of the pandemic. And then we're praying for those that are trying to, still make it work. And the fact that they're hanging around this long, shows uh, that they're going to do whatever it takes. And you saw that in a lot of shopping centers with mom and pop tenancy. Actually, they proved to be more resilient than I think a lot of investors and markets gave them credit for. Obviously, everyone likes a good national tenant with a huge balance sheet, and possibly public disclosures. But it was kind of like the 1 to 3 unit operators around the country that really were the quicker group to go build out a patio, or maybe set up the app for online delivery, or you know whatever it was to get them through the tougher times. And a lot of those strategies have carried forward, and they're doing better because of it today, or they've at least maybe even established deeper roots with their local community, as folks were focused on, buying and shopping locally to support those businesses. They really rallied around them. So it's been really cool in that sense. So it's kind of a full myriad of results in retail, and I think it will continue to change. I can't say that the pandemic particularly killed any type of retail. I think it more accelerated trends that were kind of already happening. I think that's safe to say in a lot of commercial product types. But retail's proven quite resilient, I would say, to this point.
Yeah, and I just it's and you saying that, I mean, I remember going to a restaurant the first time, and obviously I wanted to get the app with the wine, with the dessert. I wanted to get served as long as I could. I don't want to make food
Exactly.
right now or get carry out. I want to enjoy myself and spend when are they going to kick me out kind of mentality versus let's get the check and go. So yeah. And even the neighborhood shopping center, I feel like that kind of holds together a lot of the communities across the country. You don't always want to go to that big retail chain. You want to get to know the people in the neighborhood, like you said. So I couldn't agree with you more on that front. That's like something we need to keep alive, the mom and pop side of things around the country.
Yeah, and I think what you hit on is a great lead into kind of like some of the additional conversations we'll have on retail, which is kind of like, where are the winners and losers, and where is liquidity and where is the greatest demand from an investor perspective. And it's always been, the greatest demand is for grocery anchored shopping centers because grocers are essential to everyone. Even if you eat out a lot, you're still going to go to the grocery store on occasion. And then there's a likelihood you're going to stop and shop somewhere else while you're there.
Absolutely.
So, the pandemic just further accentuated that. And really those neighborhood open air grocery anchored shopping centers across the country, they do kind of serve as the present day Main Street. And so whether it is a national brand or a local brand, a lot of national brands are still just franchise operators. They're really small businesses just with a consistent logo and kind of platform that they're operating on. But those are families, working their tails off to support each other under a national brand. And so it was neat to see everyone rally around that. And likewise, that's really where the strongest investor demand has been, is for the grocery anchored shopping centers. I think the challenge is as investors were fortifying their rent rolls through COVID, working through deferments, abatements, helping tenants navigate, the ever changing effects on all commercial assets, but specifically retail. It was a little more difficult to identify, a consistent income stream and then formulate a value. Kind of towards the latter part of 2020, things kind of started to solidify and calm down. We were able to determine kind of like an equilibrium on, what a buyer versus a seller was comfortable crediting or working through, AR balances and things of that sort. So I would say there wasn't really a shortage of sellers willing to transact. There definitely wasn't. There was maybe a little bit of apprehension early on from investors to purchase. And then we saw obviously a lot of folks raise a ton of money looking for opportunistic buys. So there's an enormous amount of capital on the sidelines right now. I think the latest number I heard was like, $250 billion of dry powder waiting to buy distressed commercial assets, not just retail. And I think they're all a little disappointed right now in that we didn't see more disruption. But from the flip side of that is, I think it's a great silver lining in that a lot of the tenants in all commercial assets proved to be substantially more resilient than maybe we all thought. And so we haven't seen a robust offering of distressed assets. We've seen much more consistent transaction volume with kind of just more of like a down market as opposed to like a full bloodbath. And investor demand has continued to go kind of to the barbell effect of like either best of best has got substantial demand, and then there's still a ton of money out there for distress. And there has been some distress, but for the most part, I think going back to the start of this comment, which is the grocery anchored shopping center has proven to be the most resilient. It's proven to be the number one demand from our investor clients with regards to new acquisitions, because they feel like that is the safe place to put their dollar, relative to alternative retail opportunities. And then if you zoom out from a capital markets perspective, there's been enormous demand for industrial and apartments. I think we've all seen, and you guys have probably tracked, through your own through your own platform, the compression in cap rates and enormous pricing that have occurred in those asset classes. And so retail now coming through most of COVID here, proving to be resilient. Our cap rates have kind of relatively stayed the same. They've maybe compressed for the best assets. And so that's led us into a unique position to where we're kind of a higher yield alternative at not too much of an added risk component. So, we're trading best of best assets at a 30 to 40% yield premium to call it core industrial and apartments. At some point, if you've acquired so much industrial or multifamily, you're going to have to go get yield, right? Because your cost to capital is not free.
Absolutely.
And so I think retail's moving into a little bit of a neat spot in the market where we kind of are having a time. And I don't know how long that's going to last. And I don't know if that's going to be the case when this airs, because the narrative in this world changes so rapidly right now. And so many, factors politically, internationally can kind of derail the sentiment of the world that who knows how long it goes, but we're going to keep working hard and enjoying it while it's happening.
No, I mean, I bet what you guys see too from your seat, because it's not just, Orange County or Southern California, but you guys have product offerings all across the West Coast. So it's probably a lot of things that change, but that grocery anchored, and I'm assuming triple net is probably, if you have single tenant stuff, is probably really hot too.
Oh yeah. I mean, I would put that up there maybe, with industrial and multifamily as being, it's a flight to quality. You saw the same thing in 2009, 10, and 11. If you're going to look at two offerings, and for let's call it 50 less basis points of yield, you can get a corporate guarantee, with a tenant who's going to send you a 10K every year. Like, that's just, you're going to sleep better at night with that deal.
Absolutely.
And if you're in asset preservation mode, that's where you're going to put your dollars. So that's a great option as well.
Are you guys see it too from your angle? Like, so is the amount grocery anchor, if that's like the hottest one, which makes sense. Are the amount of sellers, are they trying to sell right now, or is it if they've held long enough? It's like, why not sell because this is the hottest, product I've got right now, or is there still demand on both sides to bring that to market, and then the buyers wanting it?
It's always been a bit of a tougher asset to trade in the West. Very few of them trade because it's the classic, well, if I sell it, can I replace it with an alternative? And the answer is no, because no one wants to let go of their grocery anchored shopping center. And so that's not like a closely held secret. That's just exactly what it is.
Yeah.
What happens is life, debt comes due, partnerships dissolve, companies are sold, and let's call it lesser quality or premium assets are spun off to recap acquisitions. Like, there's just things that happen that bring assets to market. Families who built properties 30 years ago here in Orange County as it was, growing, are maybe looking at it going, hey, family, this is now 2 generations removed. There's 15 people getting distributions. Maybe we all just take a large lump sum today and go our separate ways. And so those sort of things drive transactions. So they are getting done. And yeah, there are some portfolios where folks are looking at them going, hey, we're 98% leased, right? I can't really pull any more levers to increase my NOI other than scheduled rent growth, and you're telling me cap rates are better than they were pre-COVID. And debt is now back at better than pre-COVID debt levels. So you can sell at record cap rates, and investors can still hit their, whether it's, whatever creative financing they're willing to use, like, levered returns are still healthy, right? Especially compared to, again, alternative locations for your capital today. So, again, retail's just in a real sweet spot. And I think the biggest factor there is, like I mentioned just a minute ago, I probably should have led with this, is In 2020, lenders basically turned off the spigot for retail. It was very challenging to get any kind of substantial loan from the traditional retail lenders. There were some regional banks picking up clients doing smaller transaction type lending, but for the most part, it was an all cash environment there in call it the summer of 2020. You saw any deal basically over $20 million was paused. Any deal where you typically expect leverage to be a main component of the capital stack was really challenged in getting done. A lot of them did get done finally by the fourth quarter. Groups were able to find creative ways to finance them. So you saw a huge volume of deals get done in the fourth quarter. A lot of those just being, stuff that probably should have got done in the second or third quarter, finally closing. So, overall last year volumes were down, but it wasn't as drastic as you would have seen. And I think it kind of tracked similar to, other economic metrics that were just, absolutely dismal in April and May of 2020. I think, again, you probably track this better than most, Matt. Crexi's, seeing it through a larger macro perspective. But the good news is, they're back because retail is available. We're pricing good quality retail centers at debt levels you would never have expected. We couldn't even have underwritten these properties that aggressive, but it's a combination of just the right timing, the right asset, and usually the right sponsor, and you can get some pretty impressive debt right now.
Oh, I can imagine. Especially with all that, pent up demand of people looking at deals but couldn't do anything. I'm sure they wanted to get right back in there once they were able. When fourth quarter, basically, like if you guys are working on anything, May, June, July, was it just put on pause and then finally things opened back up a little more comfortable on the retail side when people understood the environment a little better?
Yeah, I think, the deals that were in process got done, not all of them.
Right.
I would say a lot of smaller deals got done in the fourth quarter, and collectively, our volumes weren't off too much. But I think if I recall correctly, like for 2020, I think overall things were down close to 45 or 50% from a total, annual transaction volume. So still pretty off, but it wasn't like zero like you might have expected back in April or May. I would say the real timeline when things kind of turned back on for retail was really like March of this year.
Okay.
And I'm sure that corresponded to some degree with the release of the vaccine. But I think it's also we were on the down slope from, the kind of what's called the winter uptick in COVID cases to where folks were kind of asked to stay back home, and occupancies within retailers and office buildings were, kind of capped again. And it felt like in the spring, as folks were coming out of winter, they were going to get out and go about their lives regardless. And again, to our earlier point, like retail was really the benefit of that.
Yeah.
And so we saw enormous volumes in releasing, kind of similar volume that we would have normally in a spring session. We were hitting record levels of bidders on assets that you maybe wouldn't have expected to be such a hot commodity. Call it average power centers in Western markets where you're outpositioned maybe by another shopping center. You're looking at 10 to 12 bidders from around the country, on mid-sized assets, call them $30 to $40 million. And I think if you had asked us if that would have been the case back in November or December, we would have said that's not likely to be your outcome, right? But I think it was a combination of timing, debt being a major factor there, and then also, the world kind of feeling a little bit more back to normal. And obviously, that can change drastically, as we've learned over the last 18 months. But it seemed to held up here as we're entering, the fall.
Yeah.
And so we expect it to continue.
Well, it's interesting for retail too, because I've been hearing, about the internet, what's it going to do, take people out, and it's like, okay, now COVID's here, it's going to take retailers out for sure. And resilience, I think is one thing that you said earlier was a word that I think would be true throughout the retail. They keep getting hit with all these things, and they're continuing to come back and be stronger than before, I feel like.
No question. And I think, I think the internet proved to be a good solution for a lot of tenants during this time. And online sales are incredibly convenient. I think that disruption was already happening.
Mm-hmm.
It just was accelerated. And I think the tenants who were planning for it in advance of the pandemic really benefited. It was no surprise to see some of the results from like Target, right, on the amount of click and collect traffic, where there's, unfortunately, you can't wait 2 days, even 2 days, for some of the things you need, and to be able to pull up into a lot of the spaces they had already spent billions of dollars creating and the internal systems they had set up to deal with online orders, and being able to pull up and click the app and tell them you're here and someone's out to your car within 5 to 10 minutes with all of the things you need. That's really important, especially in a pandemic environment. But also, if you're a parent and you don't want to get your 9-month-old out and throw them into a cart and go find all this stuff, like, I've got young kids. It couldn't be more convenient.
Absolutely, man. My wife and I have an 8-month-old, and same thing. I've never done grocery pickup in the parking lot until the past 8 months, and it's so convenient. I love it.
And so, like, I don't want to get into too much of a logistics and distribution conversation, right? Because that's not really my expertise, but it is starting to blur the line.
I bet.
CB, before the pandemic started, had brought the retail and industrial product lines under one leadership team, because a lot of the retailers were coming to us and asking for guidance from the on more of the logistical industrial side. So it made sense to kind of put that leadership thought in the same place. Again, way above my pay grade, not anything I'm working on. And we've got some interesting models on kind of like the store of the future, and how you've got a lot of back of house handling those last mile either deliveries or click and collects. But at the end of the day, if you need more food for your baby, you're not going to wait for an online order. You're going to drive to wherever you need to drive to go get that food. And I think a lot of that is what we're seeing in shopping centers today. And you're probably going to pick up dinner from the restaurant as well, because let's be honest, sometimes mom and dad need a break. And
absolutely.
And you're already prepping 3 meals a day and feeding it to your 8-month-old. So it's been a good example of how retail is strategically placed in an important position within the community to serve the needs of the community. And retailers are smart now. They know what kind of exhaust sales are coming off a lot of those store visits. They're not sharing it with landlords yet. No one's quite figured out how to monetize those specific sales. But if they didn't make any money operating brick and mortar, they'd be out of it. And I can tell you, they don't make any money operating solely online.
Right.
I can point you to some great podcasts with the founders of like Bonobos, who's now surprisingly owned by Walmart, where they said we weren't profitable until the day we opened our first brick and mortar store. And
wow, that's crazy.
Yeah, and you think about it, but they've got a great model where they're 100% online sales, but you can still show up, try the shirt on, and you leave with an email telling you exactly what you tried on. So in the future you want it, you just click and it comes. Think about how much they save on returns and making sure their store is stocked. Like, they don't have to stock a store. They literally send one load, and they don't have to refill that order when you take it home, because it's going straight from their distribution center to your home. So there's been a lot of cool things that folks were working on long before the pandemic that have they're still exploring ways to make it work best. But it's an interesting model that is continuing to evolve retail in conjunction with the online platform.
Yeah, and I see it a lot. Like my wife going out and shopping and coming home with nothing, and I'm like, "What did you just do?" And she can't hide those boxes though. When I get home from work, she doesn't catch them all. So I'm like, "Okay, this is a couple days later, a couple weeks later. This all makes sense now." So
Exactly, exactly. That's why you got to have the camera on the doorbell,
yeah.
right? Because that's really where the shopping's it's landing.
Oh man, that's a great point.
Yeah, we're all guilty of it,
Oh
but
yeah,
I think I don't think it'll ever replace the fact that, there's certain goods that we all want to go touch and feel before we make the purchase. I think the online car buying experience is still evolving. I don't think that's gone. I think Tesla, obviously disrupted the industry by throwing their point of sale locations into open air lifestyle and mall type positions where their occupancy cost is substantially cheaper,
hmm,
and they're not stocking 150 to 300 vehicles on a lot, which is all just burned, right? You got to buy those vehicles, you got to finance them, you got to
it's
store
crazy.
them, you got to clean them, you got to keep them safe at night. Like, so I think the entire industry is being kind of reworked, if you will, from an online perspective, not just
Yeah,
retail, but
the Tesla one's
commercial assets.
interesting. I always wondered about that the first time I saw it at the I think in the Promenade and here in Santa Monica was the first time I saw the retail side of things, and it clicked. It made all of my sense to me when I walked in there. I was like, "This, yeah, you guys know what you're doing.
They're doing something right. I
They're
mean, at
doing
least
something right."
someone's buying their stock.
Yeah. That's funny, man. Well, what do you think retail next post COVID? And I know that's tough because with Delta, like we said while we're airing this, it's obviously a scary thing out there. But do you see, especially from like an investor side, do you think there's going to be a dip in anything along those lines, or is it full force ahead? Obviously, the vaccine's out, so retail's here. People need to get out. I'm from Chicago originally, so once the winter hits, that's a little tough, but people still need to get out. So it's not like they want to stay home now that they've been able to.
Yeah, I think you'll see kind of. I don't think you'll see anything too revolutionary. I think you're going to see a return to the fundamentals. I think
Yeah.
from an investor perspective, there's continuing to be a huge focus on occupancy costs, right? Like, people want to know if the tenants are successful, right?
Yeah.
So with our offerings, they want to know who's reporting sales, how does that stack up versus, the rest of the region? A lot of the same questions you had pre-pandemic. And then I think from a, like, what the next retail center looks like. First of all, we haven't been building many of them since the GFC. We were building a ton of them in the 2000s,
Right.
and I think our largest year of new construction pipeline was maybe like 10 to 15% of what the peak was in 2006 and 7. So retail is more of an evolution of the existing than it is necessarily new construction. And I think you're going to see a lot more placemaking. I think you'll see a lot more patio space, a lot more open air, areas for folks to enjoy whatever goods, services, or F&B they're that property to consume. And I think that works really well in that it's obviously a good safe bet against any potential future pandemic risk, but it also just further solidifies why your wife would want to go meet a friend, or you and I would want to catch up for a beer at a particular location. It's a really enjoyable place to spend our time and hopefully our dollars. And I think you'll see more of that in retail. I think you'll see, a continuance of the drive-through conversion for a lot of quick casual and quick service retail. Again, going back to having an 8-month-old, I have a 14-month-old.
Yeah.
You're not going to go get a cup of coffee and pop out of your car. You're going to drive past the closer Starbucks or coffee shop to find the one with the drive-through, or the one that you just hit a button and they bring it out to your car. You don't necessarily need to have a drive-through to make that model work. And I think a lot of these restaurants and local groups are figuring out ways to do that. And I think it's here to stay. only because it is convenient for the consumer. It's cost effective for the tenant, and it's beneficial to the landlord, right? The more folks coming into your shopping center, the better. We sold plenty of properties with quote unquote parking problems. And, I mean, like, that is just the quintessential best thing you could have going for you at a shopping center. Now, obviously some might be a little underparked, but it beats the alternative, right? And so, you know, volume is what we're looking for in retail, whether it's
Yeah,
people,
absolutely.
sales, sales per foot at the grocer. So I think we'll see more of that in retail in the future.
Yeah, I've seen, a lot of these concept models, even like Taco Bell's, I think is the most recent I've seen, but some of these things look really cool. Like, why didn't we have this before? Because the old way worked. So why break it if it isn't fixed, or why fix it if it's broken?
Sure.
But some of the stuff coming out, I'm like, wow, this makes a lot of sense. And like you said, like it's like the trifecta: the tenant, the landlord, everybody there's, better off. So
Yeah, it's an experience business, and so the better you can orientate your experience to appeal to a larger group of people, I think the better your shopping center is going to be. Now, if it's a smaller property and it's specific to one style of or one type of offering, or whether it's culturally focused,
yeah.
or it's storefront retail in an urban setting, and people are begging you for a UPS store, right, or a FedEx store because they've got to make those returns. Like it's that's the beauty of retail. It's really specific to a particular market, and it's really exciting because the community embraces change. They want to see the newest concepts. They want to see something that they maybe it's a restaurant their friend tried out up in LA, and now they're opening their second location in Orange County,
Oh yeah.
right? Like, they get
Oh yeah.
excited about that because someone else has tried it and it's exciting. So retail has the benefit of being that kind of situation, and I think it's going to forever continue to change, and that's part of the fun, part of the art, part of the science, part of the madness of retail.
I love it. I love it, man. That's awesome. I know we've been going for a while here, but this has been great. I've got a couple last questions still. In what you guys are working on yourselves in particular? I know you work across a lot of markets. What are you seeing the most activity on stuff that you guys have on the market, or just in general? Maybe not listings you have, but you know, buy side, anything you guys are working on from that angle. Like, where's the most popular stuff?
It's interesting. There's always been a transition of capital from the West Coast into markets in the East, where you can get slightly better yield. That's just not a secret. It is what it is. There's a lot of really successful developers and net lease brokers who have made great careers porting capital from California into assets around the country, where you
Mm-hmm.
can find similar demographics, believe it or not, but much more, call it grounded fundamentals, lower rents, lower
Mm-hmm.
price points, with similar credit with your tenancy. I've been most recently surprised by there's been a large influx of folks reaching out, asking for assets in Arizona and Nevada from California, who aren't necessarily looking to just park assets, they're not transitioning cash from a 4-unit apartment building they've owned for 30 years and they just want to own the auto zone in Scottsdale. They're actively looking to move assets into markets where they might relocate one day.
Okay.
And I'm not saying this is like a major trend in the sense that everyone's leaving California. I know that gets a lot of headlines these days, but it just seems like maybe it's recency bias, but like the headwinds
Mm-hmm.
folks who have larger portfolios have seen trying to operate and keep tenants in business here in California. It's no secret. It's been a little more challenging than it has in markets like Arizona and Nevada and others that are similar. So I think they're feeling a little bit more confident that if we were to encounter a similar situation in the future, that the environment might be a little bit easier to operate in if they were in, those kind of trade areas. That being said, there's equally, if not substantially more investors that absolutely want to have their dollars in California, absolutely want to own in all counties of California for different reasons. And the main reason is there's just so many people here, right? I mean, you can't duplicate the density. And that's probably the biggest solution for any problem in a retail center is density, right? Because even if there's not a ton of buying power, they're still spending what they do have on food and essentials, and that's not going to go away. And so that's one trend I've noticed. Another one would just be, the fact that I think more folks are open to retail than maybe were before. It's kind of been stress tested over the last 4 or 5 years. I mean, it's no secret. You can't open a Wall Street Journal at least every day without seeing something to the effect of malls this or that. And
absolutely,
when you really break down the overall square footage of retail across the country, about 7% of all retail square footage is in open air, big box power centers. And then you've got about another 7% in mall GLA. Okay.
Wow. I didn't realize that.
Yeah. So, I mean, it's a pretty good chunk, right? But then you got to remember there's just a ton of the smaller retail, right? That doesn't get tracked to the same level, but makes up a good majority of the asset class. And of that 14%, you got to argue that at least half of it is well located, right? Is like the dominant center in its trade area, right? These tenants wouldn't be there and still operating if they weren't profitable. So you're really talking about like the balance of that, which is like 7% of retail that's getting all of the bad publicity, getting really knocked around in the public's eye. But yet we all go to shopping centers and they're packed, right? And it's a battle to park slightly close for your groceries. It's a battle to park, anywhere near the theater traditionally. So, while we're going through a real rough patch here, I would say that, the majority of retail is really strong. And I think it'll be continued to be resilient. I think the online component is it's not a online or in-person retail. I think it's online and in-person retail. And I think that really shifted probably back in 2017 or 18 when we realized that the sky wasn't falling. You weren't going to continue to see negative comp growth on holiday shopping. It's not growing at the same rate. It's just redistributing, and the tenants are still making the dollars. It's just they've got different avenues of porting their goods to consumers. And like anyone in business, you're not going to shut one off because the other one continues to grow. You're going to continue to evolve and develop both avenues of pushing your product. And I think the consumer appreciates that. And I think for the majority of tenants, it's working well.
That's really great overall feedback right there, man. I like that a lot. And, kind of going on the crystal ball side of things, talk about the holiday time. What do you think? Are people going to be camped out for the TV and from Best Buy or whatever the popular one is this year, or is it all online? And I know you can't tell, but what would you think?
No, I think it's going to be. I think we've all been predicting a robust second half of the year in retail. I think we were hoping to see a little bit more deal flow with regards to just like transactions in the first half, but I think there are still folks working through, rent roll type issues, and then if there's no need to sell, then they're not doing something, right? So, but from an overall just tenant performance perspective, I would say most folks you talk to in the retail industry are going to be pretty bullish.
Yeah.
I think there's been a component of forced savings. A lot of folks did not get to take as many trips as they wanted to. They've obviously put together a lot of domestic travel, which has really benefited some tertiary parts of the country in a lot of good ways. But I think there's going to be this huge push to really celebrate each other And, the best American way to do that is bringing a lot of gifts for the people that matter in your life. And so I think folks are going to be treating themselves. I think retailers are going to be finally, they've obviously worked through a lot of supply chain issues. I think the ports will hopefully have caught up at that point, to where, there's an abundance of supply, to where there's some great deals. And I think, the traditional Black Fridays that, have been kind of tracked and beat up, that's really getting spread out over weeks at this point.
That's a
Right.
good
And,
point. I feel like it starts
you know,
now.
yeah, exactly. And so I think you'll still see some headlines that it's not as strong as it was. I think the same amount of dollars are continuing to get spent. In fact, I know they are.
Yeah.
They're just going through different avenues and over different different set time periods than necessarily like just Black Friday.
Yeah, 1 week. I bet that helps you guys a lot too, the retail sector in general, on the trading of buildings for that.
Yeah, I think we need to see it strong. Like, definitely
Mhm.
want to see it strong in the brick and mortar space. Again, going back to the mom and pop and just any operator, they make a ton of money in that period. And so if we could get the sales happening, and the employees back in the stores that we need in order to push those volumes. The toughest thing to hear in retail is that, certain, whether it's service operators or what, are reducing capacity, not because they are required to, but because they want to maintain the same level of service.
Oh, wow.
And they don't have, the ability to provide that on a 100% occupancy basis. I've heard of it in the hospitality industry, and I've definitely heard of it in a couple others. And so I think that's a compliment to the tenants wanting to ensure they're delivering the correct experience, and making sure the customers are getting the value they expect. But I think those are some of the scenarios that are just going to grow organically and slowly as the world returns to, full occupancy in our normal daily lives.
No, that's spot on, man. I couldn't agree with you more. That's awesome. I Man, Jimmy, this has been fun. I know we've been going for a while now. I could talk to you for the rest of the night. Next time at the Goose again over beers. I gotta say.
Yeah, I talk too much, especially when it comes to retail.
Not at all.
Yeah, I
This
mean,
this
it's
has been good.
exciting, it does tie in with society so
So
well
close.
that the conversation is, you can get granular from an analytical perspective, but it's also just a feel. And I think everyone feels good about retail right now, and will take it. And I think by the end of the year, you're going to see a lot of a very interesting transactions, for a lot of the right reasons, not a lot of
Right.
the wrong reasons. And so hopefully that continues to bring fresh capital, fresh ideas, and fresh, retailing concepts to, everyone's local communities.
No, this has been a lot of fun. I couldn't agree with you more, man. I love the retail side of things, whether it's going to eat or looking at deals on Crexi, especially your guys' deals. I love looking at them and checking them out. So couldn't agree with you more. Then this has been a lot of fun. For anyone out there that doesn't know you, where's the best place to find you at? How can they get a hold of you in case they got questions, comments, or anything like that?
Yeah, absolutely. So I'm best reached at Jimmy, just JIMMY Slusher at CBRE.com. The office number is 949-725-8500. And, if you want to look at kind of different types of retail we might have available for sale, or, you can view all of our available retail assets at www.nrpwest.com. That's National Retail Partners West.com. Just click on view listings, and there's always a myriad of options. You can sort them by single tenant, strip, retail, anchored, or just look at all of them. And we've got some interesting deals out there right now and coming to market here too.
We love it, man. We love hearing that. That's awesome. Thank you so much today again, Jimmy. This is a lot of fun. Next year we'll do this in person. Well, we're going
There
to
you
start
go.
that soon, hopefully. So we'll get
Cool.
that going. And thanks everyone for joining us today who tuned in. This has been a lot of fun, and yeah, we hope to see you soon on the next one.
Thanks for having me.